Okay, we're back. Another week, another episode. I've got Meredith. Meredith, say hey.
Hello, how's everyone doing?
I'm hanging in there. I'm doing pretty well. How are you doing? How are you holding up? What are we, 6, 7, 8 weeks, 20 weeks? I don't know. How many weeks are we into this quarantine?
I,
I've
I
lost track
think
of
we're
time.
the end of week 6.
Oh,
I've kind of like broken these out into phases of
okay.
quarantine,
Where are
and
we at? What phase are we in?
we're entering phase 4. So let me
Okay.
describe what the previous 3 phases were. So the first phase
Okay.
was all positive. We were still working out. We were trying
Uh-huh.
to find ways to better ourselves, like doing a master's class or something. Then phase 2, everyone realized that the bananas that they purchased are now ripe. So the entire country made banana bread in phase 2.
I
It
have
was
a
all
lot
over
of banana bread.
Instagram. Everyone was out there baking. We ran out of yeast in the grocery stores.
Uh-huh.
then phase 3 was everyone realized they couldn't get haircuts. So all of the wives, girlfriends, significant others became hairdressers in homes.
Uh-huh. I'm quarantine ready, by the way. I have been planning for this for the last. This is the silver lining of losing your hair. Anyway, so we're in phase 4. What's phase 4?
I don't know yet. I
Oh,
predict
okay.
phase of the cross,
We just
but
passed
we'll
all the.
see.
Oh, I don't know. That's really ominous. Okay, good. All right. Well, so why don't we get into it this week? I've been doing a lot of the talking on the latest and greatest. So Meredith, tell us what's happened this week. What do we know? What should we expect?
Yeah, let's do some updates. So, a lot of you are aware, another PPP funding was passed or is in the process of being passed.
I think it's passed,
Did
signed
it pass
yesterday by the
yesterday?
House. I don't know if the president signed it, but yeah, it's
Yeah,
good,
it's
good as
for all
done.
intents and purposes passed. So what this means is another $310 billion. 250 will go to big banks, so the Chases and the larger banks, and
Yep,
then 60 billion is specifically for small and community banks.
got it.
Um, and as we've seen, like a lot of the small banks are communicating and moving these loans through. So um, I guess like the question is, do you think our clients that are in line at like a Chase or a larger bank should hop out of line and switch to a smaller bank? Like, what are your thoughts?
Yeah, I mean, well, this is like the $1 trillion question, I guess, right? But it's not an easy answer. I guess what I would say is if you're in line at a large bank and you have some visibility into where you are. So again, I have firsthand experience with Chase. Chase sent an email out to all its customers that said, "Hey, look, we got 4 steps, and here's where you are in the step." Step 4 would be funding. Of course, if you got the email, you haven't been funded. Step 3 is like we've already approved you. We're just waiting for your E-Tran number from the SBA. If you're in stage 3, you should just stay put, right? You've already gone through the quote underwriting process, and it would be disruptive for you to leave and go somewhere else and do it all over again. Meanwhile, you can't apply twice, so you risk having 2 applications in there and getting them both denied. If you're not in stage 3 for Chase, for instance, you're in stage 2, which is we haven't even reviewed your application yet. I would absolutely recommend you get out of line. And if you're somewhere like that in a large bank where you don't think or it's clear that they've told you they've not evaluated your loan package yet, get out and go somewhere else. And I would tell you, I've talked to a number of folks and a number of lenders, and there's all the we've been talking about Cabbage and Divvy, and what I would recommend, particularly if you're a Gusto customer, is to go with Gusto. You've got, the application is very easy. All of your information is there. I assume the forgiveness piece is going to be equally easy. I just talked to the team yesterday. They've got a very small backlog. They're moving through these loan applications. Go to Gusto if you either haven't applied or you are in purgatory with your existing large bank. That's what I would say.
One other plug for Gusto, we did have a client apply last Tuesday or Wednesday, and he got funding yesterday. So it was fast.
Yeah. Yep.
um,
Great. Meanwhile, those of us that applied for Chase day one are still waiting on more. Anyways.
different rabbit hole.
Yeah. Okay. All right. All
uh,
right. So what else? What else do we know about these
Yeah.
programs?
So one other thing on the bill is that there's going to be another $60 billion for the EIDL because
Oh,
that
right.
also ran out of money.
Right. Right. Right.
Yeah. Okay. And then as far as changes go, there's a re-emphasis on a good faith certification. So essentially, if you receive the money and you don't think that you're going to need it, you can give it back. We've
Yeah, and I think this is like, in response to the Shake Shacks and the Ruth's Chris of the world, right? That there's outcry because these businesses that don't need the money took the money, and so I think that the SBA is just doubling down on that good faith certification, saying like, look, if you're asserting to the fact that due to the economic uncertainty that you need this loan, you shouldn't have access to public markets and things like that. So these folks, violated their good faith certification, and they just said like, look, we're going to be really looking at this thing, and we may pursue criminal charges against folks who violate the certification. So I don't think that really affects our clients necessarily. But I mean, look, if you find yourself in this situation where you think, man, I took this money and I shouldn't have, and based on that certification, you can give it back by the 7th, and no harm, no foul. So, anyways, but that's more of a response to the large abusive borrowers.
I can't
To my reading,
imagine
anyways.
many, if any, of our clients are in
Yeah. I don't think I wouldn't recommend any of ours to, but
yeah.
good at least that they're trying to do something about that. All right.
Okay,
So what
so for
about
the
people?
people that have
Yeah.
received funding, let's just like go over what that looks like right now. 8 weeks to maximize forgiveness. Nothing, a max of 25% for non-payroll related items. So you
Yep.
can't spend over 25% of PPP on non-payroll related items. And those are defined as rent, utilities, and interest on your mortgage.
The non-payroll. Yep.
Okay. One other like question that has been coming up is like, how are utilities defined? Like what's rent defined as? And so the SBA defines utilities as phone, internet, gas, water, and electricity. So
Yeah.
hopefully that
And I
provides.
mean, one thing, we've said this multiple times, the Treasury and ZCBA have said this more than once, that we expect more clarification to come out on exactly what qualifies and exactly how we should be thinking about these. But in the meantime, as you're trying to plan for your forgiveness, I would take the most conservative lens on what these categories are. And again, go back to the spirit of this thing, which is to keep businesses in their concurrent with their landlords and their rent, and to keep people employed, right? So it's not meant to pay for all sundry of things. It's meant for very specific purposes.
Mhm.
And again, take a conservative view until we have guidance that suggests you can add more stuff.
Yeah, agreed. For our clients, we are going to do a mid-loan check-in, an estimated forgiveness, and just make adjustments. That way, we're like really on top of what the potential payback is going to be. Again, a caveat: we don't have all of those details on what the forgiveness looks like yet. Like there is going to be clarity, and as we know that, we will communicate that,
Right.
and we will help do those estimates as soon as
Right.
we can. But we're just not there right at the moment.
Right. Yep. But we'll give our best. We'll give our best guess, when we can.
Yeah.
One other thing to throw on for those that didn't get the PPP. I mean, obviously we still have time, but let's say 3 or 4 weeks come by and you still you don't manage to get PPP funding. There is that employee retention credit, which is not quite as as beneficial necessarily, but it is something that you could take advantage of. But you can't take advantage of both. So if you don't take the PPP, it's a 50% credit up to $5,000 total per employee. So you get $5,000 per employee. It's a credit against payroll tax. It's probably less than most folks would have gotten otherwise, but it's still not bad. So there's still money out there if for whatever reason the PPP falls through.
Yeah. One of the questions that I've been getting this week is like, we want to maximize forgiveness. This money's coming in. How can we maximize forgiveness? Should we hire someone so our numbers are up with last year comparatively? Should we terminate someone so they're on like what do we do?
Yeah. Well, yes, yeah. Uh, that's a good question. We do get that a lot, and I have a very specific point of view on this, which is, and I don't know who needs to hear this, but if it's you, don't make a decision based on PPP forgiveness that you would not otherwise make without this loan. Okay, meaning like if you don't need to hire an individual, don't hire somebody to get the forgiveness. And if you don't need, I mean, I hate to say this, but if you have an individual who's you don't need anymore, right? Like that, there's just literally nothing in the world for them to do that is productive. You don't you probably shouldn't continue to pay them just to get the forgiveness, right? That forgiveness is a wonderful benefit, right? But it's not meant to do like don't chase forgiveness uh, just in order to get it, right? Ultimately, you have this loan. The worst that happens if you don't get max forgiveness on your loan is that you have a very low interest loan principal that you have to pay over 2 years. That's a really good thing. That's actually very beneficial. You're going to spend this money either way, whether you're going to give it to this employee that's not doing anything or you're going to give it back to the government. But if you have to give it back to the government, at least you get 2 years to do it at a really low interest rate. And in the meantime, you can spend that money on things that you actually need to pay for now. So by all means, please do that. Don't play games on trying to go get forgiveness because in the end, you're just going to spend money that you don't need to and you're going to be worse off. Now, there are examples, for instance, of people making decisions to get forgiveness that do make sense. So, for instance, we had a question about, hey, I've got a contractor. Should I convert them to a full W-2 employee? And they would therefore count against my sort of head count for the purpose of the forgiveness calculation. That's a great idea, especially if you need it, right? Like that's a win-win. You're doing the right thing. You're helping an employee out, and now you're taking money you would have otherwise spent anyways, and you're just reclassifying it. That's a perfect example of a smart decision. But again, just paying for things that you don't need just to get forgiveness is not going to benefit you. So don't do it.
I just
Period.
like the pile of money. Just I guess it shouldn't change what you were going to do anyway.
Yeah, it definitely shouldn't. It's not even the spirit of the program. The spirit of the program is so that you can retain employees that you need to continue keeping your business alive, and making decisions that are not in the best interest of the business is not helping you keep the business alive. That wasn't the point of giving you the money. So don't feel the need to do that.
Yeah.
Okay. Off my soapbox.
Soapbox.
I'll just step down now.
I think it was the most asked, like, what do we now? What do we do it? And I get it. Like, it's this huge chunk of money, and it can be scary. So
I totally get it.
Yeah. Any other questions on that? Let us know. So we've got another interview to bring to you this week. Ryan sat down with Carl Smith from the Bureau of Digital and talks all things agency trends.
All right, so very excited for our interview today. I've got Carl Smith of the Bureau of Digital. I suspect many of you, well, actually, some of you are already members of the Bureau of Digital. Many of you have heard of it, but for those of you that haven't, it's a phenomenal organization. And I'm not even going to steal Carl's thunder. Instead of describing it for him, I'll just let Carl. Why don't you tell the group what the Bureau is all about?
If you're going to use words like phenomenal, I'm going to let you run with it, Ryan. Right. I mean, so the Bureau started in 2012. I was an attendee. I had my own shop, EngineWorks, and we were innovating because we weren't business people, which is, I think, what most shops do. We just kind of make stuff up because we don't know. And got contacted by two guys from HappyCog, Greg Story and Greg Hoy, who were putting together a group. They were pulling together about 24 people to spend 3 days together and talk about how we ran our shops. And I asked them, why me? And they said, well, you're either really smart or you're totally full of shit. And we want to know what
work. That's right.
And I was like, yeah, I want to know too.
That's right.
So I don't have a partner like that. So we got together and spent 3 days together. And honestly, we shared so much of what was working and what wasn't working. And it was so open and so honest. And people who you were a little skeptical of at first became great friends. People were there who coined terms, who wrote books. And some of them were struggling. And then you had people like me who were making shit up, and we were doing well. So we kept getting together, and that was 8 years ago. And now there are almost 9,000 people in the community.
Unbelievable.
Terrifying.
That's right. Yeah. Wow. That is unbelievable. And so, that's a really good, part of the reason why I'm so excited to have you join us is because, like us, but on a substantially larger scale, we're sitting in an interesting time for agencies, and you have this really unique lens into what's happening in the agency landscape, right? You've got the benefit of a lot of data points that those of us who aren't you don't have. So maybe the first sort of basic question is just, what are you seeing right now? Like, obviously it's a mixed bag. Some people are doing well, some people aren't doing well, some people are just business as usual. But if we get beneath that, sort of first layer of like observations, what are you seeing? Is there anything interesting that's sort of like these are who are succeeding and these are maybe who are struggling? Like what should I take away from all this?
Yeah. So the first thing I'll say is there's still such a cloud of uncertainty
Right.
that even shops that are doing great, that maybe they need help. They can't handle all the work because they're in one of those industries that's gone gangbusters. Maybe they're, in certain segments of government or healthcare, higher ed that's trying to build out their online programs. They're still really hesitant.
Okay.
They're still really wanting that SBA money,
Yep.
right? They're still really trying to make sure they're going to be okay. But I guess the main thing is over the past couple of weeks, not everybody, there are definitely some people who would come at me on this, actually. But I think there's becoming a little bit of cautious optimism
Okay.
that it's not really going to get tremendously worse.
Okay.
It's almost like we can kind of see where things are going. So part of that is we do a weekly survey in the Slack channel that just says, how are you doing? Or how are things going? And then it says getting better, still the same, or getting worse. And the last one we had, getting worse went down a lot.
Really?
Getting better went up. It almost doubled in terms of the number of people who said they were getting better. So obviously it's not statistically, well, maybe it's statistically
Well, I mean, at 9,000 members, you're getting close. Yeah.
Well, yeah, well, we did. And I want to say there were probably about 80 or
That's
90
a
people
lot.
who did the little
Yeah.
Slack
We
poll.
do Slack polls too. We don't get 90
So,
responses. So that's, you've got a sample size here.
yeah. And because we're tracking it, like that first week, it was a majority of nothing, everything's the same and things are getting worse. That was 4 weeks
Yeah.
ago. So we're seeing it slowly come up.
Yeah.
But even with that, everybody's still super hesitant.
Well, and that stands to reason, to be honest with you, right? I mean, that first couple, and we kind of had a feeling this would be the case the first couple weeks. Obviously, those who are directly impacted, fell off a cliff. And so those who can't open, can't buy. And then the rest of us were just like, well, we're not sure what's going to happen. This is a completely new normal. But then, weeks go by and we all have to get back to the business of being in business, and we just sort of adapt. And it's stabilized to some degree. Like you said, I think there's there's still a ton of uncertainty, but we've kind of had to grapple with the fact that, okay, here I am, I'm working. I still need to deliver value for my customers. My customers still need to deliver products for their, for their consumers or whatever it is. And so we don't know how the story ends per se, but we know we've gotten used to the sort of part of the narrative that we're in right now.
Yeah, I think that's absolutely right. And it might not be that things have actually calmed down. It could be that we've just come to terms.
I think you might be right. Like, I think that actually is where we are. We've come to terms, and again, we don't know, but and you alluded to the PPP and things like that. Like, obviously those things have helped. They have specific windows of time, 8 weeks or whatever. So, hey, if I'm a recipient of that money, I know I've got confidence I can pay my people for the next 8 weeks. And we all think, maybe the economy starts to slowly reopen in 8 weeks. Who knows, right? There's at least some kind of glimmer of hope, and I think maybe that's what's driving the optimism. Let me ask you another question, because you talk about these Slack polls. I just noticed on LinkedIn you had a I think you called it a bureau pulse, but it was maybe a broader poll, if you will, sort of saying, I don't know that it was to sentiment specifically, but more like, what are you experiencing? Like reduction in sales, furloughs, things like that. I saw that and I thought, I really want to know the results. What did you see?
I'm happy to share them. So we had 179 digital professionals. Majority were service shops. We also have a lot of in-house teams that are part of the community now.
Okay, that makes sense.
So it was interesting to actually compare and contrast a little bit. But 70% of those who responded said they'd had projects put on hold. So
got it.
That
Which
was
makes sense.
Probably the number one thing we have in common, right? But 60% had new projects come in.
Wow.
So you start to see some of this that's kind of interesting. But when you start looking at the layoffs, it's about 8% had already had layoffs or furloughs.
Got it. Okay.
So it's like you start to see, it does kind of paint a picture. But the one that made me the happiest of the 179 was one person responded. Only one person. I wasn't happy that it was this person.
Sure, but there wasn't more than,
But there was one person that said they're probably going to have to close.
Got it. Yeah, that's great. I mean,
less than 1%, right?
Yeah, well, and that actually brings up. So that's fascinating. A couple of comments or a couple of questions, but I'm gonna jump to one, which is, and I've heard some punditry out there. I even think David Baker has said this once or twice on a webinar, but there's I can't even think of the most recent estimate of the number of digital agencies. Suffice it to say, it's an awful lot. And there's some wisdom or common thoughts around that. Maybe it had never been easier to create a digital agency ever before, and maybe we had a surplus, right? And maybe on the other side of this, we will have fewer, and maybe that's a good thing for those that are on the sort of stronger side. I don't know. What do you think of that? Like, what's your take on? Do you think
Yeah,
they're going to
so
be less? And is that a good thing? I don't know.
I think it's gonna dip a little and then it's gonna shotgun up. Actually,
You think so? Why?
I
What is
do.
that? What drives that shotgun?
In my experience, and I started my shop in 2003 and then joined the Bureau in 2012. So the things I've seen across all of this is it's a cycle
Yeah.
between large corporations building in-house teams that can take care of stuff because agencies felt too expensive,
Uh-huh.
right? And then it gets to this point after a few years where those large corporations didn't invest in those people. And so suddenly they don't have the skills they need to do something that's critical. So they look outside of the organization and they hire a shop. Those people in-house start to get frustrated. They leave in-house.
Uh-huh.
And what do? They either go service side or they spin up
Yeah.
their
Their
own
own.
company.
Yep.
So I think what we're going to see, and I've already started seeing it in the community, you've got some shops that are going gangbusters and can't get enough done. You've got other shops who are super talented, but luck of the draw in a way ended up in
Yeah.
a vertical: tourism, travel,
Yeah, right.
hospitality, whatever it
Highly
might
impacted.
be,
Yeah.
that they've tanked. And so you're starting to see mergers.
Yeah.
I'm
Interesting.
seeing
Okay.
conversations about it. And it's not just acquihire stuff. It's truly two organizations that may love each other that are like, you know what, let's figure this out.
Which
Or it could
symbiotic.
be
Yeah.
a shop that's really big. I had one shop come in that just said, can you please ask the community how many actually specialize in Drupal and WordPress? Because we're looking to enhance that capability and this stuff. And we ended up with about 10
Wow.
that they're talking with that had the skill sets they wanted and were not in the verticals they were in, which were government and higher ed. So it's like, these are the things I think will happen.
Yeah.
But then also based on the in-house teams, I'm making sure I get this right. 12% of in-house teams had reduced hours, 20% had layoffs or furloughs, 21% had taken company-wide pay cuts.
Interesting.
So you start to see, and then 25% had projects canceled, 27% freeze on raises. So you see this positioning of the in-house teams where they've got the same uncertainty we do
Yeah.
as shops. So they're probably going to start looking at what they can do. So I think we'll see maybe second quarter, third quarter of 2021, a lot of new names.
That's fascinating. Yeah, the way you described that, it's funny that I haven't sat down and thought about the cyclical nature of the shift of big brands between in-house and agencies in quite the way that you articulated it. But it's obvious, it's spot on. It's a really good observation, and it actually begs another question, which is to say we're as you kind of indicated, we're moving towards the pendulum was swinging towards in-house teams. It's starting to get some traction going the other direction for a couple of reasons that you mentioned, but also just in uncertain times, agencies provide flexibility, right? You don't have the W-2 and the benefits that you would have of. And the infrastructure of investing in these individuals, and so I could see that that accelerating the pendulum coming the other direction. A question for you, and I don't know if you have a point of view on this or not. Is that an opportunity, right? Meaning, I think there was this historically where agencies are filling these expertise gaps. There may be an opportunity to fill a labor gap, right? Where I'm now doing like staff aug or something that looks kind of like staff aug, to sort of maybe take advantage of this pendulum swinging and these in-house teams having to furlough, lay off, reduce. Are you seeing anything like that, or do you think that's an opportunity?
Yeah, so I've seen that even before the pandemic.
Okay.
Right. So when you have, especially the thing we need to realize too is most product companies, specifically those that have some sort of an app or online tool, Now, I'm friends with some of the people who run some of these, and they are having layoffs, and they are seeing people cancel subscriptions and things
Sure.
of that nature. You expect that, I mean,
Yeah.
right?
Yeah.
But they still have the residual income. They still have this ongoing customer base, community in some cases. Um, they normally are going through growth spurts where they need really talented people to help from time to time,
Yep.
right? And so there
Yep.
are shops in the community who have provided that staff aug concept. Now, it really depends on the culture of your organization,
Yeah.
because if you try to move from being a very loving, caring, compassionate, I hate to use the word family because you can't fire your brother. I've tried, right? So it's like there are things
Yeah.
where, you have to be careful. And then there are layoffs sometimes. But I think if you were to go from that environment to suddenly trying to put a bench in-house at a big corporation,
Disruptive.
you're going to lose people. You're going to
Yeah.
lose. This is one of the things that I've been in a lot of conversations. It's, don't sacrifice your core values.
Yeah.
Don't sacrifice your purpose. Don't sacrifice your vision, right? Like, make sure that those things carry you through this.
Yeah.
So if you were an organization that was already doing that, and I'm not saying those organizations can't be loving and caring, they have
It's
multiple
different.
cultures normally. They have in-house, like their own team culture, and then they have the teams that they're putting in the staff aug. So I guess there's an opportunity there, but I wouldn't recommend it if you're going to end up with a company that you don't want to work at.
Well, you bring up a really interesting point because I think again this creates all manners of opportunities, right? Some industries aren't doing as well, others are doing better, certain service offerings. And a strong argument could be made that that is an opportunity for those that are already incumbents in that space, but not necessarily a reason to whiplash, right? Not necessarily to say,
Right.
"Oh, I was in restaurants. It's not really a great place for me, so I should sort of pivot over to e-commerce." There's already a lot of e-commerce shops that are better positioned to take advantage of that, and so affixing to your core values and who you are is the better approach to create a more sustainable agency on the other side, I think, is what you're saying.
Yeah, totally agree. And I think one of the things that's really important here as well, and actually David Baker was one of the ones who said this a couple of weeks ago. We had him on a Q&A about selling in a crisis. And I'm pretty sure David said this, but it was this idea that you can't grow tomatoes in the winter,
Yeah,
right?
exactly. Yeah.
So if you're trying right now to sell stuff to people who can't buy,
Yeah.
who are just as stunned as you are, if you're not leading with empathy and trying to understand what everybody's going through,
You're not
you're
going to be like,
screwed.
yeah.
But if you try to take care of the soil now, if you try to till it through relationships, if you try to make sure that you're getting the right nutrients in there so that when this winter does thaw,
Yeah.
those people remember you. And I think there's even this opportunity. Joe Rinaldi in the community, he's talked about old gold. I think there's this chance to reconnect with old clients, this chance to reconnect with people who may have moved on. If we have this time, let's invest it in people who know us already.
Yeah.
And even say, hey, if you have an existing statement of work, or you have a new phase of a project coming up, reach out to that client and say, I know this was approved. I also know everything has changed.
Yeah.
So can we just talk about, is there anything we can do for you? Like, what goals do you have now that we can be a part of? And that'll open the conversation versus them sitting there going, oh, I hope they don't ask about this.
Right.
Charge in, man. Just
I
talk to
totally
them.
well, and it's funny. I was talking to and I don't know if you've run into these folks at all. It's Sales Schema. They do like outsourced BD for a bunch of digital
Yeah, for
agencies.
sure.
Yeah, I was talking to Dan, and we hit on the interesting. I don't know if it's interesting, but the idea that as you're going, and we agreed exactly with what you're saying, and you reach out to your existing clients, and then also old clients and even prospects. So those who you've had a conversation with, you really got into a project for whatever reason, wasn't a good fit. They decided to go with somebody else, or they decided not to do it. Whatever was true 90, 180 days ago about why they didn't work with you is not true now. Everything has changed, right? And so, knowing that, like, again, the idea that you can't grow tomatoes in the winter, like, you have to sell to somebody who already knows, likes, and trusts you. Those people do, and again, their circumstances are changed, and that's definitely the most fertile ground for conversation. Yeah, I think that's good.
And I'd also say there has never been a better time to take a moonshot.
Yeah,
right?
right.
Never been a better time to say, I've got nothing to lose. I have no idea what this organization is going through. And interestingly, I can't share because of non-disclosures. I don't want to get them in trouble.
Yeah.
But one of the shops in the community went after two whales and landed both.
Wow.
And the main thing was they were a really well-known, really great company.
Yep.
They focused a lot in retail. They focused a lot in other aspects, but they had in their state two really large organizations in verticals they had never been a part of. But I think there's something now, not to say that you can't still do global stuff and all that, but
Yeah.
if you're within a state in the US, you're
Yep.
experiencing something together. You have a commonality now. Like if you're in Florida, you talk about the beaches, right? It's
Yeah.
like, oh God, everybody's giving us hell, right? California never closed theirs. Okay, so
It's
get
like,
off my back. But the thing is, we have something in common now we
yeah,
can talk about. And that also we know when we'll be able to see each other possibly, right? So
that's
I
right.
think there's a new idea where local kind of makes a little bit of a comeback.
I think it's a really great point, and I could probably ask you questions for the rest of the day, but to be respectful to your schedule, I'll leave it at that and say, Carl, thank you so much for joining and talking with us. It was unbelievable. Really appreciate it. Thanks.
Oh, I'm glad and I appreciate it, Ryan. And to the Upsourced community, it's a pleasure to meet you.
Thanks for tuning in to episode 5. Let us know if you have questions, comments, anything else you'd like to hear from us.
It's been fun. See ya.